Hey, welcome back to my Friday walk-in video. In today's episode, there's been a huge week in crypto. The Fed just held rates steady, but still hints at 2 more rate cuts expected to come in later this year. Pakistan's talking Bitcoin with Michael Saylor, XRP whales are loading up big, and stablecoins just got crowned the new money layer of the internet, plus a $90 million exchange hack and Bitcoin flexing as the world melts down. So let's unpack the biggest signals shaping your financial future. Let's start with a big one. Compliant stablecoins are no longer just a side hustle in crypto. They're rapidly becoming the financial rails of the internet, and Wall Street is finally taking notice. With the US Senate passing the Genius Act this week, stablecoins just got their regulatory stamp of approval. This makes it legally legit now, and fast becoming the TCP/IP of money, global, programmable, and unstoppable. Under the Genius Act, this means that stablecoin issuers can now back their stablecoin assets with short-term US treasuries, enabling billions upon billions of fiat money to be poured into the digital payments rail system. It still doesn't address the shortcomings of excessive fiat currency debasement and money printed by governments, mind you, but nonetheless a great, cheaper, quicker way to make cross-border payments at a fraction of a cost, including by those unbanked, debanked pockets of world population. Bitcoin is the only truly hardest store of value asset in the long term. Canaccord called it and Congress confirmed it. Stablecoins will be the new money layer of the internet. So think Venmo without banks, PayPal without borders, and it's happening fast, whether you're ready or not. This isn't some stablecoin versus crypto debate anymore. It's infrastructure. It's rails. It's where trillions will quietly move while Bitcoin remains the sovereign store of value. Now, from regulatory green lights to red flags, let's talk about the $90 million Nobitex hack that rocked the Middle East's biggest crypto exchange. So, $90 million have evaporated overnight. Iran's biggest crypto exchange just got hacked, and users? They got nothing but regret. One hack, one nation, total wipeout. Now, if this doesn't make you move to self-custody, I don't know what else will. It's not FUD, it's fact. If you don't own your keys, you simply don't own your crypto, period. This was more than theft. This was geopolitics on-chain. Cyber warfare now targets crypto, and centralized exchanges around the world are the weakest link. While chaos spreads across borders, one asset remained unfazed. Let's talk about how Bitcoin held the line through global tension. Trump called Iran's leader an easy target. Markets panicked, but Bitcoin didn't move an inch. That's what neutrality in money looks like. Bitcoin doesn't care about borders, bombs, or political games. While fiat crumbled on headlines, Bitcoin kept mining blocks every 10 minutes. Now, that's trustless money in action. In a world where leaders tweet threats and oil spikes, Bitcoin just works. That's its biggest strength, quiet, predictable, incorruptible. And speaking of bold moves, let's head to Pakistan, where Bitcoin may be entering the national treasury, with none other than Michael Saylor leading the charge. Pakistan is consulting with Michael Saylor on a Bitcoin-backed economy. That's not just a policy shift, that's Bitcoins going global at a national state level. El Salvador was indeed the spark, but Bitcoin might be the fire. A nuclear nation potentially adopting Bitcoin reserves? That's changing the game completely. If this happens, expect the IMF, BRICS, and Bitcoiners to react fast. It's the kind of move that triggers chain reactions, not headlines. And while countries stack sats, what about individuals? Let's look at how owning just one Bitcoin is becoming the new American dream. Forget the house and white picket fence. The next gen dream is owning just one Bitcoin. That's the new flex, the new freedom. There are 56 million millionaires and only 21 million Bitcoin. Owning one puts you in elite company, and that window's closing. Bitwise calls it the new benchmark of financial sovereignty. One Bitcoin equals generational wealth anchor. Stack it while you still can. That's the bottom line message. Now, from capital to infrastructure, XRP whales are making big moves behind the scenes. let's look at what 2,700 new million token wallets actually mean. 2,700 wallets now hold over 1 million XRP each. Now that's not noise, that's deep-pocketed players positioning ahead of something big. This isn't price hype, it's infrastructure. XRP is quietly building bridges to TradeFi through tokenized real-world assets. Think pipes, not pumps. Whether you're a fan or not, the RWA space is warming up, and XRP just might be the banking rail of blockchain. So to wrap it all up, we turn to the Fed, where interest rates paused and Bitcoin stood ready to benefit no matter which way the wind blows. The Fed held rates steady, so no surprises there, but the signal was clear. 2 cuts still on the table before year end. Bitcoin doesn't wait for pivots, it just keeps clearing blocks every 10 minutes. Whether the Fed cuts now or later, the game's changed. Capital is already flowing to hard assets, and Bitcoin is where conviction lives. Wall Street hangs on Powell's words. Bitcoin's run on math. No politics, no delays. Just a system that works while the old one keeps guessing. So that's all I have for you today, and the message still remains the same. Invest wisely and invest in Bitcoin. Until next time.